Welcome everyone to today's Becker's Dental Review webinar, Key 2019 Objectives, Trends for DSO Leaders to Know. I am Emma Goodman with Becker's Healthcare. We will begin today's webinar with a panel discussion and may have time at the end of the hour for a question and answer session. You can submit any questions you have throughout the webinar by typing them into the Q&A box you see on your screen. We are looking forward to hearing your questions. Today's session is being recorded and will be available after the event. You can use the same link you used to log in today's webinar to access the recording. Before we begin, I'd like to thank our two sponsors for today's webinar. Lending USA exists to provide smart financing solutions at the important moments in life. The money people need, when and where they need it. Lending USA specializes in point-of-need and direct-to-consumer financing solutions for the elective medical industry, dental care, pets, pet care, consumer goods, services, and much more. They also power a proprietary network of websites that provide thousands of personal loans each month to meet a variety of needs. Lending USA's mission is to create lasting business partnerships by providing innovative point-of-need financing solutions. They are committed to creating the best consumer financing experience available using a proprietary lending solution that uses both traditional and next-generation underwriting and fraud detection techniques to approve loans as quickly as a few seconds. They also work closely with their merchant partners, providing the tools and training they need to easily and efficiently maximize customer financing and grow their business. Our second sponsor today is Solution Reach. Patient satisfaction and practice reputation mean everything to a dental practice, no matter how many providers or locations. But it's hard to focus on patient satisfaction and practice growth priorities when staff are so busy with other things. Solution Reach gets it. That's why they created the leading dental patient relationship management platform on the market today. The Solution Reach platform is designed to scale to meet the needs of any dental organization, from a single office looking to grow to the largest multi-site groups. Solution Reach helps you set the system up to reflect your organization's structure and uses a proven success formula to define the right goals and metrics for you as well. They have done this more than any other PRM vendor out there, and they serve over 25,000 practices and support some of the largest and most successful dental groups in the country. Now let's get started with today's webinar. I'm thrilled to introduce our three panelists today. We are excited to have Jerry Rhodes. Jerry serves as the Chief Executive Officer for Dental Care Alliance. We'd also like to welcome Dr. Arwinder Judge. Dr. Judge serves as the Chief Clinical Officer for Aspen Dental. And last but not least, we are pleased to be joined by Brian Kaleo. Brian is a member and the Director of DSO Industry Group Dicema Gossett PLLC. At this time, I'm pleased to turn the floor over to Scott Becker, publisher of Becker's Healthcare, who will be moderating today's panel discussion. Scott?
Great. Thank you so much. And thank you all for joining us, both our audience and our participants. We're going to work through 5 to 6 questions with our participants about the dental practice world today, DSOs, and so forth. Jerry, let me start with you. And let me start with first asking each of you, Jerry, Dr. Judge, and Brian, just give a quick 15, 20-second introduction of yourself to get warmed up and let the audience know a little bit more about you. Jerry, can I get you to start?
Sure. I appreciate the opportunity to be here today. I suppose, my perspective on the dental industry is relatively new. I've been associated with DCA for about 4 years, which is also the extent of my dental industry involvement. However, during that time, I was a board member and became CEO of the company about 2 years ago. My history really has been CEO of primarily mental health companies, and obviously I like to tell people we've now gone from mental to dental. So useful analogs, a lot of direct-to-consumer, probably more retail and very different approaches to patient acquisition than you see in traditional healthcare. So a little bit about me, and my experience in the dental field.
Thank you very much. And Dr. Judge?
Yes, hi, and once again, thank you for the opportunity to be on the webinar. I've been Chief Clinical Officer. I've been with Aspen Dental for 11 years now. Prior to that, I'm a graduate from New York University, and I had my own dental practices. I opened I had 6 practices. I was president of my own DSO as well at that time. And I knew the group over here and came on board with Aspen about 11 years ago, and it's been a great ride and a run so far.
Congratulations. And Brian?
Yes, thanks, Scott. Very happy to be here. I'm the director of Dykema's DSO industry group. I've been in the dental space for 23 years, back when nobody cared about it. My group is focused exclusively on the DSO and group practice space, and we represent approximately 350 DSOs in all 50 states and 6 Canadian provinces.
That's amazing. So and let's talk about that. And let me start with Jerry and then go to Dr. Judge and Brian. Are there regions or markets in the country that DSOs aren't that penetrated in, or that are penetrated but are still very exciting to DSOs? Jerry, let me ask you that question to start with, and then we'll go to Dr. Judge and Brian. Any markets or regions that people are still particularly excited about or see growth in?
I can certainly speak from my perspective. I think that, we see some fundamental changes occurring. I mean, broadly speaking, the demographics reflect population changes in the country as a whole. And, as we see significant growth in states like Texas and Florida, the Southwest, another area, Arizona, we just entered. We're very excited about that. We think these are the states that are going to support continued growth and opportunity for DSOs. They're attractive places to live. They're attractive places to recruit to. I think the DSO concept, generally accepted, great commercial environments. We think they afford continued pretty significant opportunity going forward.
Great. And I think both the notion of the regions and markets, but was, I think, even more telling about it was 3 or 4 of the factors that you said were so important about it. Obviously, great population growth, continued population growth, but also acceptance of the DSO concept and construct, unlike states like North Carolina, where it's much harder, but allowing DSOs to operate well. You also mentioned good commercial business. And when you talk about that, do you mean good commercial dental plans, or do you just mean good commerce generally? Any thoughts on that? And how much does good Medicaid come into account as well in picking good markets?
Well, from my perspective, when I talk about commercial, I'm talking about commercial generally. I mean, you look at the Dallas market. I mean, you've got Toyota's world headquarters or North American headquarters coming into Dallas. A significant job generation, great benefits, that type of thing. We see this going on cities throughout Florida, Texas, the Southwest. I think relatively benign DSO environment. I mean, as opposed to, let's say, some of the states that are much more tightly regulated, or we seem to have general attitudes somewhat in opposition to DSOs as a concept. Benefits, let me say, those are all good things. Benefits, I would say from my perspective, and this is more broadly based on looking at insurance plans and in the entire healthcare spectrum, I mean, dental benefits are kind of universally bad. So it really doesn't matter. One specific plan in one specific state may be very good. That's not going to be a driving factor. I think they're all terribly mediocre in terms of coverage and what they allow and what they access. And Medicaid, not really a consideration for us. We do some Medicaid, principally focused on pediatric. Obviously, that's a robust market in Florida. and I'll say the same in Texas, but that's not a principal focus of our excitement about those states.
But you really talk about population growth and good commercial environment in general versus the payer environment, and you're not really focused heavily on the Medicaid business, so that's not it. It's really just a healthy economy and a healthy population growth leads to good opportunities and a healthy DSO
Absolutely.
environment.
Absolutely.
And Dr. Judge, let me ask you the same question. Thank you, Jerry. The same question. In terms of markets that you look at growing into, you're obviously part of a huge DSO, great company. Where else do you guys look at as potential growth markets?
Well, we're pretty much excited by every market, to be honest with you. We're, just to give you a perspective, we're going to end the year at about 820 offices. We'll have opened 80 new offices this year. The plan is to continue that kind of growth. We'll open up another 85 offices next year and the year after that, or potentially more. We just entered California, so, we're pretty excited about that. We're in 41 states. We started North Carolina this year as well. And for us, frankly, we like to go to areas where doctors don't like to go, frankly, and we like to bring access to care to patients in those places. So the plan is really to go into every state. We're at 41, and we'll be at 50 at a certain point. So there's not a part of the country that doesn't excite us, frankly. So.
And let me ask you a follow-up question to what you said. In terms of growth, more of the focus, and we'll come back to the same question for Jerry and Brian at some point, is more of the focus around acquisitions or brand new de novo practices. What's been the growth plan there? And as I hear you talk about opening 85 more offices, it sounds more like de novos, but I'd love to get your take.
Yeah, no, that's great. Well, the one thing that sets Aspen Dental apart, I think, from a lot of DSOs is our growth is entirely de novo growth. We do not do any acquisitions at all. We are the largest branded dental support organization in the United States. And every office operates under a similar philosophy, which is breaking down barriers to create access to care for patients who need it. So the brand has, there's a lot of great things that come with the brand, and then there's things that we are probably the largest target out there also, because when people think about DSOs, they think about Aspen Dental because of the large brand associated with it. But 100% de novo, no acquisitions.
And let me ask you a question about that. At what point did the company transition to be just de novo versus acquisition? And what drove that? Was it just the cost of acquisitions, the difficulty of sort of strengthening a company culture on acquisitions? What led to just doing de novos? Was it just better return on investment? Just give us just a couple of thoughts on that.
Well, so from day one, we've been de novo growth. We've never done acquisitions. And the thought process for us is that there's when you go and do de novo offices, you can pick the real estate that you want to be in. When you acquire practices, there's a lot of benefits from having an experienced doctor there. A lot of the times the equipment might be older, those types of things. We're opening brand new offices with a great network of doctors that are with us. And the reality is that when doctors come into the practices from a recruiting standpoint, they see the best technology that's out there, and you got brand new offices. And it's something that's really worked well for us. So it's, every group is doing their thing, and this is what works well. We understand how to do de novos really well, and we have great teams that are able to put those de novos up quickly and have owner doctors that go into those practices, and they're able to succeed and go into areas that generally doctors, I'm not sure people were rushing to get into, parts of, say, Flint, Michigan back in 2008, but that's when we were going down to Michigan. So it gives us a lot of advantage as far as where we want to go on location-wise and real estate-wise. Helps us with, bringing the right kind of demand and success to the doctors.
And Dr. Judge, one more question before I turn to Brian. Medicaid markets, not Medicaid markets, what's Aspen's sort of core thought on, commercial type markets versus self-pay versus Medicaid?
We don't take any Medicaid at all.
Got it.
We
So
have
completely not.
Yeah, no, none of those. But every single practice with the brand averages over 6.5 new patients a day.
Fantastic. And we'll come back to that a little bit. It wasn't our list of questions, but I would like to talk about patient acquisition and marketing and so forth at some point as well. Brian, you've got a great perspective in the dental industry. You've been in it for longer than almost any lawyer advisor's been in it for 23 plus years. You head up a great dental industry services group. Some of your perspective on where you see markets growing, not growing, what do you see from the chains you work with? What's some of what you hear?
Well, yeah, I think your question at the beginning was, what markets sort of excite you? My answer to that exact question is Canada. Canada is the great frontier. We've recently done the second and third largest DSO group, transactions for DSOs in Canada. And in terms of it being sort of, a target-rich environment and sort of a great frontier, Canada really excites me right now. When I speak nationally at a lot of the dental conferences, there's more dentists and more entrepreneurs than ever before from Canada coming down. They're thirsty for information. They want to understand the DSO models, and they want to replicate it up in Canada. So in terms of a market that, excites me, I would say the Canadian market really excites me. In terms of, where in the United States we continue to see growth, you'll see it places where the economy is strong, Texas, Colorado, Arizona, California. Hawaii is a fastly emerging market. Puerto Rico is a very interesting market, and Florida is a very interesting market in terms of domestic growth and expansion. But that type of growth is, what I would call routine growth. There's plenty of DSOs in those places, and we're just adding on. But Canada, in a lot of ways, is like a great frontier and does sort of excite me.
Now, when you look at sort of the Canadian market, well, let me ask you one question about the domestic market. You work with several hundred DSOs. Do you have a vast differentiation between DSOs that really focus on pediatric Medicaid versus just not? Do you see? Is there still that vast differentiation amongst DSOs?
Yeah, there's sort of three categories out there. One category is a DSO that focuses almost exclusively on Medicaid, maybe 75% or more. A second category would be a DSO that doesn't touch Medicaid at all, just will not do any Medicaid. And then there's sort of a hybrid that does a small amount of Medicaid under the theory of they don't want to turn family members away. If mom and dad are there, but grandma's on Medicaid, or some of the children are on Medicaid or something, they don't want to turn them away. So they're going to do a small percentage of Medicaid because they don't want to turn business away. And that seems to be sort of the three categories in the marketplace. You won't see anybody that's 50-50 or anything like that. It's either almost exclusively Medicaid, no Medicaid, or a small non-material percent because they don't want to turn family members away.
Got it. And then in terms of what you see from chains that you work with, a lot of focus in terms of their expansion through acquisitions or de novos, and I assume that your clients that went into Canada were doing it through acquisition mostly to start with, but are you seeing a lot of acquisition, M&A activity, or more de novo growth activity?
Well, you're seeing a lot of everything depending on the marketplace. I mean, this right now, we're undergoing, Scott, the great evolution and great consolidation of dentistry. Everything is evolving to DSOs and everything is consolidating. Right now, the market penetration is just about 21%. So there's a lot of runway to go. So you're seeing a lot of everything. What I am starting to see is in certain marketplaces, DFW comes to mind because that's where my office is, you're seeing a certain saturation of de novos. So there's, in certain markets, there's a little less of an appetite for de novos, but the market is such that you can still do lots and lots of de novos. I would expect in the next 5 years or so, you might see the de novo activity to slow down a little bit as the markets become a little more saturated and the acquisition model might rule. But right now, there's a lot of everything going on, to be honest.
And let me ask you one more question, then I want to come back to Jerry. In terms of total dentists versus affiliated dentists, a couple of years ago, the number was about 200,000 dentists or so, and of those, about 40,000 might have been affiliated or so forth. So it left, and it ties into what you just said, it left lots of room for acquisitions plus lots of room for de novos. What's that breakdown today of independent versus affiliated in total?
Well, some statistics, and there's not a uniform way to calculate this, but I do see a lot of statistics, and a lot of my clients spend a lot of money researching this. Some statistics that are out there right now is, again, 21% of the market is affiliated with the DSO, 89% is not. There's on order of 6,000 to 7,000 fragmented unaffiliated practices that are still available to be affiliated. That doesn't count de novos that are opening up. You still have opportunities to open up, new practices. Another telling statistic is something like 61% of all dentists under 35 are affiliated with the DSO or about to be, and the number is more like 38% for dentists over 50. So what that tells you is the dentists over 50 are lagging behind the great evolution and consolidation, but the dentists under 35, a majority of them, are affiliated with DSOs. So those are just some helpful statistics as well.
No, and that's really helpful, and that's sort of the movement of a younger generation more towards employment versus pure entrepreneurial opportunities, just like you're seeing with medical doctors, a greater percentage going to employment of some sort, or affiliation in this case. Jerry, let me ask you a couple questions. In terms of Dental Care Alliance, a focus on acquisitions, de novos, or both?
Principally acquisitions. We do a small number of de novos a year, but our main focus is acquisitions.
And any core thoughts around acquisitions? What works? What doesn't work? Do you need a great lead dentist in the group? A group that's got a great footprint? What causes a group to be particularly attractive to you folks?
Well, we look at obviously the stability of the practice, practitioner turnover, growth opportunities. We want to see practices that we think are going to afford some additional product line growth, as well as maybe expanding their footprint. And then hopefully we'll see a staff that is also interested in growing and expanding their capabilities and skills. I don't know that there's really a single formula or template that would characterize sort of a one-size-fit-all grid for success. I think it varies in a lot of options under that we've seen, and a lot of variation on what have been very successful affiliations for us.
Got it. Let me ask you a different question that really tails off of something that Brian said. How are recent dental school graduates looking at DSOs versus independent practice versus some mix? What's your sense of how people are looking at things as they graduate today?
Well, we've had very good experience of late tapping into the graduate dentist market, and I think the sense I get is that they are very, very hungry to get employed quickly. A lot of them are graduating with significant debt and anxious to get experience, anxious to get employment and opportunity as quickly as possible. So I think they view DSOs as a great entry point for their careers. And
do you see sort of a difference in perspective amongst older versus younger dentists in terms of DSOs and employment, affiliation, et cetera?
My sense is that more of the inveterate, more entrenched sole practitioners that have been out in the field for a long time are probably, in many respects, where a lot of the antagonism towards DSO exists. I mean, I can't speak universally for that, but my gut would tell me that's the case. I think the other factor that I think is at play with graduate dentists is the number of women graduating now is I've heard estimates that somewhere around 50% of all graduates now out of dental school are women. I think they have very different expectations and objectives with their careers. I think DSOs afford them a level of flexibility and I think highly compatible with their principal objectives in many cases post-graduation. So to your question, going back to your question, can't speak for the mindset necessarily of the broad dental field, but my gut would tell me that the older, more inveterate practitioners are probably where most of the antagonism towards DSOs existed. I don't particularly see that with graduate dentists.
Thank you. And Dr. Judge, a follow-up to that question and the introduction of a new question. First, the appetite of recent dental school graduates and how enthusiastic they are at looking at employment or joining some of your de novo practices or just Aspen as a whole. And then a second question that we'll start to talk about is the introduction of price transparency and how that's going to affect DSOs. Dr. Judge, any thoughts on those questions?
Yeah, so on the first one, I think the world has shifted now as far as it relates to how dentists in general view DSOs. I think we've kind of crossed that threshold where, at one point, 10 years ago, we were all facing probably some obstruction in multiple states, and I think the industry's done a nice job at educating people on what exactly DSOs do and how they support doctors. I think graduate students or recent dental school graduates, they view it very favorably, and we work really hard at telling our story, as I'm sure many other DSOs do. And what I find is these students are not only looking for somewhere to make some compensation, but they're also looking at trying to get a balance in life and mentorship programs. And when I think about the things that we do around the doctors, it's something that I pride ourselves in is when you got somebody that's going to be able to hold your hand after dental school, it makes a lot of difference for these students or these recent graduates. So I think it's looked upon very favorably in the dental schools. I do think that there's still some pushback with perhaps a little bit more of the experienced doctors, but we're finding that a lot of the experienced doctors now, I've had doctors come in from different dental associations, some presidents come in from different dental associations. I take them around our building and we talk through certain things, and they're like, where were you guys 40 years ago? Like, I can't believe I don't have to deal with this or insurances or HR or this and that. Because they never get training for it. So I think, as doctors graduate, they look very favorably upon it. In fact, I have parents and their children are dentists as well, and they look at it and they're like, don't come and work in my private practice. You should go work at Aspen Dental because you're going to get a different kind of support. You have an opportunity to buy a practice. As far as your question on price transparency, really it's transparency around pricing has really been one of our cornerstones in Aspen Dental, and we're kind of ahead of the curve on that. For years, we've been publishing pricing for many services and products, things like dentures and implants, Invisalign. We publish all that stuff on our website already. So we know that cost is a huge barrier for patients. We work really hard at Aspen Dental to try to keep the pricing below certain levels, so we try to make it affordable for every patient. So not too worried about that. I think that this kind of falls, it's pretty much what we do currently anyways.
Thank you. And Brian, let me ask you a question about two things, and I'll let you start with either one of them. The first question, you've got a bird's eye view of this, mergers and consolidations amongst DSOs. What's going on in that market? Why don't we start with that? What do you see in the DSO M&A market?
Well, it's the most explosive M&A environment I've seen in 23 years. You're seeing a lot of record multiples being paid. You're seeing a lot of overpayment going on in the marketplace. The marketplace, you'll see sort of a couple players. You'll see very established DSOs that do acquisition, that know what they're looking for and know what they're going to pay for. They're a very safe bet to affiliate with. And, they're going to pay a very fair multiple, but they're not going to overpay. And then you've got a population of folks that really want to get into dentistry. It's like there's a party going on, they've heard about the industry, and they want to be involved, and they're willing to overpay to make their first acquisition. So often when I do sell-side representation, the clients have to weigh two choices. Somebody that has a tried and true track record that's going to pay a little smaller multiple but is going to be a very safe bet versus somebody that has no track record whatsoever, but they're willing to overpay. And most of the deals that we're seeing, at least on the PE side, are rollover deals, Scott. You'll get 60%, cash up front, and then 40% is dependent on a second equity event in 3 to 5 years. And the money that you can make on the second equity event dwarfs the money you'll get in the first instance. So it's very important to pick the best partner or the right partner, and it's very important that the second equity event occurs. So, price isn't always the only consideration. It's ability to turn it and get to the second equity event. But, to answer your question, what we're seeing is a very, very explosive M&A environment right now.
And let me ask you 2 follow-up questions to that, just very quickly, and you'll talk about them if you can answer this question. If you can't, don't. The most active PE funds in it, and the 2 or 3 most active acquirers amongst the existing and established DSOs.
It's very hard to say. There's a lot of activity going on. I don't want to answer it, not because there's some confidentiality. I don't know that there is. But if I mention somebody, I'm going to miss somebody. But let me say it this way. There's a half a dozen PE funds that are very, very active, that have made a lot of investments, are very successful at it. They pay a very fair multiple, but they won't overpay. They're very disciplined, and they've got a tremendous track record. Maybe it's 6 or 7 or 8 PE funds. On the DSO side, same thing. I'm not going to get into a game of mentioning them and excluding somebody, but there's 6 or 7 or 8 really well-disciplined, really well-run DSOs that are very aggressively, expanding. And the rest of the market sort of envies them a little bit and is playing catch-up to a certain extent.
And Jerry, let me turn to you on these 2 questions. What are you seeing in terms of DSO M&A? And then also, did you have any comments like Dr. Judge had about price transparency?
My perspective is it's very active. I mean, it to me, and looking at other areas of healthcare, dentistry is vastly unpenetrated in terms of aggregation. However we want to define a DSO, I think to some degree, DSO, hard to know what it is, but you sort of know when you see it. But the definitions are all over the map. But that aside, still vastly unpenetrated. Thus, there's going to be a lot of private equity interest. I mean, you've got 200,000 dentists. I mean, where I heard anyone talk about 5% aggregated to maybe 10% aggregated. I come out of areas of healthcare where you can literally count on 2 hands the number of scalable opportunities. So just the breadth, I think, of the industry is going to be significant in terms of potential opportunity and M&A activity.
Jerry, let me ask you.
Yeah.
Let me ask you a question coming out of something Brian said, and that you're touching on. Expected still tremendous activity. We know that there's very disciplined DSOs, very disciplined private equity funds, and then we know that there's some that are really trying to build a platform or gain a platform, so they'll overpay a little bit. In a recession,
well, overpay.
How concerned are you?
Let me say something. Overpay is in the eye of the beholder. when he said that, I kind of
it's a bad word.
I'm not sure.
So,
yeah, it's really not. I mean, look, somebody has an expectation. They're going to pay what they're going to pay. It's not for me to judge. They're overpaying for something. I mean, we all have the basis of our experience.
Let me rephrase that. Someone that pays up for a platform or pays up because they see growth in a practice that maybe somebody who's already got a bigger platform doesn't want to pay that high a multiple for, or PE funds just got very strict metrics. But really, regardless of what somebody's paying, recession resistance. What do you see in terms of recession resistance in the DSO business? Obviously, some of the DSOs highly leveraged, some are not. Any thoughts on this? And it's one of our questions from our audience as well. So I'd love to get your thoughts about how this looks in a recession.
Well, I wasn't in this field when we went through the Great Recession. I was in another area that I would say went through relatively unscathed. Not to say that there weren't impacts, but we probably saw growth grow flat. What we do know about the dental industry is it went through the Great Recession prior to the Great Recession, 08, 09, at about 5% growth. Those couple years, we saw growth flatten out to about 2.5%. Recession-proof, that's probably about as recession-proof as you can get. So I think that the evidence seems to indicate that there is stability, and the relative robustness of the industry seems to hold up well when we see economic downturns. As for individual companies and leverage and financial strategy and structure, how that I honestly can't say. I mean, I think that anyone highly leveraged going through a recession is in for some white knuckle time. But this industry looks to me to be about as recession-proof as a large-scaled healthcare vertical can be.
Thank you. We've got a question from sort of someone who's got their own sort of maybe competitive perspective in the world, and of course neither Jerry or Dr. Judge has to answer this, but Jerry, I'll ask you first. Any plans for DCA to enter into sort of the dental insurance world or dental membership program world in competition with insurers?
Well, we have a membership plan called DentRight that is not, in some respects, I guess, slightly competitive with the insurance products out there. They're also more or less discount plans. But I would say that we have no plans to specifically set up an insurance product per se. There is some viability. I can understand why people would do that, but not in our horizon right now.
And Dr. Judge, let me ask you the same question, and again, comment or not comment on it as you like. Aspen's interest in setting up sort of insurance plans or membership plans. Any thoughts along those lines?
We're evaluating discount plans. I think a lot of the DSOs have these, but entering into the insurance business now, we don't have any. It's not something that we're looking at doing in the near future at all.
And Brian, your 30-second thought on this from the universe of DSOs you work with. How much interest in DSOs getting into the dental insurance business, the dental membership business?
Not an enormous amount. There's a lot of regulations involved in that, and right now there are so many opportunities available to consolidate the rest of the 89% of the unaffiliated practices without, imposing an undue regulatory burden on you. There's not a lot. I mean, there have been a few of my clients that have inquired about that type of thing, and when we get back to them as to all the regulations they have to follow, usually it ends their appetite for that, but there's a few that are interested in doing it, but I would say it's just a handful. There's just too many other opportunities available right now, Scott, that don't carry an oversized regulatory burden.
Fascinating. And Brian, one follow-up question to that. Any states that you still see DSOs just staying out of because of regulatory challenges or just commercial challenges?
I mean, the two strictest states, you pointed this out earlier, North Carolina, New Jersey, is a very strict state. There's been some recent case law in New Jersey that has given pause, to some people. Some insurance companies sued and were able to, decline payment because they contended that an MSO or a DSO was not structured properly. So that has definitely got the attention of some folks. But at the same time, there are tremendous opportunities in New Jersey and North Carolina, because if you do jump through the regulatory hurdles and get your model together there, the competition's, relatively less than it is in some other states. It's not as saturated. But right now, if I was to look at all
lots of independents in those states.
Yeah, yes. So, if I was to look at the two strictest states today, as we sit here, it would be North Carolina would be number one, New Jersey would be number two, and there are some folks that steer away from those states because of the regulatory burden. But at the same time, I've got plenty of clients that we've structured them in those states, and they're thriving right now.
Thank you very, very much. I've got another audience question that I'd love to get very quick sense from folks. In DSOs, dentists and hygienists, my pronunciation is so bad, and I apologize. Jerry, I'll start with you. Dentist, dental hygienist, help me out here, is generally paid salary or productivity?
A mix of both.
Okay. And Dr. Judge, any thoughts on that as well? Do you see a mix of both with productivity payments versus salary or salary plus bonus? What's the sense of what you see?
So generally what I see is what you probably see in a private practice as well. But there's a salary component that the owner doctors will pay their doctors, and then there's a profit sharing model. Just like, if you have your own private practice, there's a certain amount of money left at the end of the, month or whatever time period you're looking at. So there's a profit sharing model as well. So it's a combination of both is what I see.
Brian, 30 seconds on the same question.
I don't want to just be like everybody else, but it is a combination of both. Certainly for dentists, percent of production seems to be the industry standard right now. 10 years ago, there were a lot of organizations that would just pay a straight salary to dentists. I really don't see that. There are some, but it's a minority. Percent of production seems to be, at least from my perspective, the majority of the market when it comes to dentists. When I talk about hygienists, I see both. I see salary and I see percent of production. That's a much closer mix for hygienists and registered dental assistants and things like that. But for dentists, overwhelmingly, at least from my perspective, percent of production seems to carry the day, or percent of collections to be precise. It used to be percent of production. Now it's percent of actual money collected.
Thank you. And let me ask each of you again, really quick answer on this. In a recession, in a downturn, will DSO still be making acquisitions? Brian, Dr. Judge, Jerry, Brian, do you want to start with that? Will there still be acquisition activity? Will it be more muted? Will it be at lower multiples because leverage will be tighter? But in a recession, will there still be a lot of acquisition activity?
Yeah, this is the biggest question we get right now because we know there's going to be a recession. Maybe not this year, but next year or the year after. I would say this. There is going to be a lot of activity, but some activity may be curtailed. The private equity funds that walk up and pay cash, they're going to feel more pressure than ever to do DSO deals because they're going to have to get above market return in a recession. So I don't expect that to slow down at all. Some of the easy money that's out there on credit facilities where people are out buying up, making acquisitions on credit facilities in a recession, if the credit markets tighten up, some of that activity might slow down potentially. But overall, I think we've got a very strong market that's been virtually recession-proof the last time around. So I think you're not going to see any type of freezing up or slowdown. I think certain transactions that are just a product of easy money and easy credit facilities, they may dry up. But on the whole, I would expect the M&A environment to still be fairly busy during a recession.
Thank you. And obviously the great thing about dental is that everybody needs dentistry, we need dental work. or dentists, 350 million Americans, whatever the number is on any given day, everybody needs it, recession or not. And generally, it's not so expensive as to be something that people cut out, although probably some downturn in their use. Dr. Judge, any thoughts on the same question?
Well, the last recession we went through, we continued to grow there, and I think maybe it, from DSOs that do get affected, some of them that are maybe more in the cosmetic set of things might get affected. I think from an M&A standpoint, I think Brian's right. You might have a little bit of a slowdown, but generally it's, I think, people, when the economy goes bad, people get a little nervous, but they generally take a look at dental practices and they look at this marketplace, what I've experienced before, and the activity still continues to be up and it continues to go on. Because it is a good place to put their money. And so that's smart people making good investments. And do the multiples come down a bit? We didn't experience that through the last time, but I'm not sure what would happen in the future. I think there might be a little bit of pressure there.
Thank you. Cherry, any comments on that question? And then any comments on teledentistry and whether that's having an impact in the dentistry or not really?
Take the question regarding the recession. I think I pretty much agree with everything everybody said. Probably some risk maybe in the specialty areas. Medicaid may be at risk simply because it ultimately is going to be a function of state budgets. But I think still, and again, relative to other verticals in healthcare, I think you'll still see a fairly active market. As for teledentistry, I have seen no impact in relatively little activity in that realm. It doesn't appear to be any sort of significant momentum with teledentistry out there.
And Brian and Dr. Judge, any quick thoughts on teledentistry as well?
Well, this is Brian. Or go ahead, Dr. Judge. I'm sorry.
No worries. We're continuing to evaluate teledentistry. I think where you're seeing some impact is in the clear aligner space there, and you have consumers or patients or consumers want certain things and they want it done easy. But there are groups that have popped up and they're using teledentistry or to help them try to go direct to consumers with some of the stuff. But generally, we haven't done much with teledentistry at this point, but we're evaluating it right now.
Thank you. And then, Brian, any insight from you on that or any color on that question?
Yeah, I mean, teledentistry is the fastest growing segment for the clear aligner space. I think Dr. Judge is correct. That's where you're seeing it for mild to moderate cases of malocclusion. There's various companies that have entered the teledentistry platforms, and they're doing it at a lower price point for the patients and providing greater access for the patients. There has been some pushback. The American Association of Orthodontists has filed complaints, and if you're following this, it's kind of going back and forth. But I think there's a lot of momentum for teledentistry. I think the fact that it provides greater access at a lower price point is ultimately good for the patients. And I think a lot of the pushback you're seeing, at least reminds me, having spent 23 years in the space, reminds me of some of the pushback we saw for the conventional DSO industry 10, 15 years ago. There were people saying, there shouldn't be DSOs, and people were making all kinds of crazy comments like that. And in time, DSOs have gained industry acceptance to the point where today in 2019, nobody's making any comments like there shouldn't be DSOs or anything like that. And I think it's going to take a few years, but I think teledentistry has enough momentum behind it that it is ultimately going to gain industry acceptance the same way the conventional DSO industry did.
Thank you very, very much. I want to thank, first I'll just quickly thank our sponsors, Lending USA and Solution Reach, for their sponsorship. Can't do this without your help, so we appreciate it greatly. And then just as much, our three panelists, Jerry Rhodes, the CEO of Dental Care Alliance, Dr. Judge, Chief Clinical Officer of Aspen Dental, has been an Aspen Dental veteran now for 11 years, and Brian Kaleo, who brings sort of an unusual, incredible perspective to the DSO industry as the head of the DSO industry group, and just based on pure experience in the DSO world for over a couple decades. So Jerry, Dr. Judge, Brian, fantastic, and thank you. And obviously a great audience on today, and we appreciate you so much listening in. If you ever have suggestions for other webinars and ideas, would love to get your thoughts. You could email sbecker at beckershealthcare.com or anybody at Becker's Healthcare that you generally work with or Becker's Dental. We appreciate it greatly. Brian, Dr. Judge, Jerry, just fantastic. I learned a lot. I hope our audience enjoyed it. I know we got through a bunch of the audience questions. Just great. Thank you so much.
Great.
Thank you, Scott.
Thank you.
Thank you, folks. We'll follow